The Deputy Prime Minister and the Finance Minister of Canada, Chrystia Freeland. There she is. She joins us now. Minister, thanks for taking the time.
It is great to be here with you.
I know on the big financial days, like Budget Day and the Fall Economic Statement Day, governments like to present a real air of confidence. But I look through the projections, I look through the caveats in this document, I see a lot of anxiety about a lot of uncertainty.
I would agree with the point about uncertainty in the world. And look, I think that is a truth universally acknowledged and frankly pretty obvious to all Canadians. There is a lot of uncertainty in the world. But where I disagree with you, David, is I'm actually, in a appropriately humble way, really confident about Canada. This is a challenging world, but there is truly no country in the world that is better positioned to get through this uncertainty than our own, and not just get through it, but thrive. And I just want to cite one number for you, which was in my budget, my fall economic statement speech, and that is this year, in the first 6 months of this year, Canada was the third most attractive investment destination in the world. And that wasn't per capita. That was just total sum of money.
Right.
Per capita, the best. Now, that might seem kind of esoteric to people, but what that's saying is the world is choosing to invest its money in Canada precisely because the world has that confidence in Canada, and I do too.
But if you look at the projections in your budget on the base scenario, which in itself is a bit pessimistic, averaging about 1% growth this year when most of that growth has probably already happened in the first part of the year, and barely above zero, 0.4 next year, with unemployment going up to about 6.5%. You sandwich all of that with all the mortgage renewals that are coming up, and the potential for a real shock to the economy there as increased mortgage payments take money out, there are fewer people working, that takes money out. This looks to me as an enormous short to medium term challenge for the economy in the country.
So the base scenario, as you know very well, is not my forecast or the Department of Finance. It's private sector economists, which, by the way, is like such a great thing about Canada, that you can't cook the books. It's based on what the private sector judges. And I actually read that as really optimistic, because what the private sector economists are saying is we will avoid the post-COVID recession that was pretty much universally forecast. What they're saying is we're going to do something that a lot of people thought was impossible, which is have a soft landing after this time of extraordinary economic volatility. So I see that as a positive. And the other thing that I see as tremendously positive is the long-term fundamental strengths of Canada. What are those strengths? We have an economic plan that is investing in jobs and growth. You see the foreign investment coming in, you see that industrial transformation, and we're investing in people. We're investing in building homes for a growing country. Those are all great things for Canadians.
The new housing measures, though, I know the housing accelerator is starting to bear some fruit, and I know you reduced the GST off purpose-built rental construction earlier this year, expanding that to co-op in this. But the big sort of headline pre-story before today was the $15 billion in loans for rental construction. That doesn't start till 2025, 2026. Neither does the new $1 billion for low-income and affordable housing. Why, with the needs being so urgent right now, why is it a couple of years before those programs even come on stream?
Well, because those are existing programs, and those are being added to programs that are already there and are already delivering. And I've seen it with my own eyes. I was in Toronto at an announcement of 2,600 apartments being built across Toronto thanks to the Rental Construction Financing Initiative. And it was great. It was great to see those homes being built. And the builders there said to me, this is a great program. We love it. It really works. It is getting us to build rental rather than condos because it creates the financial incentive. But you know what they said to me, David? They said, what we're worried about is the program is so popular, it's going to run out. And I couldn't say to them then, but I'm glad to say to you guys today, we heard you, and we are topping up that program, which is working and delivering for Canadians.
Okay, so these top-ups, you're looking at deficits in all the out years, about $40 billion this year, the high 30s next year, before there's any new spending plans announced. Debt servicing is about $45 billion this year. It's over 10%, so more than 10 cents of every dollar goes to debt servicing. It's going to go to $60 billion by the end of this forecast. That's 2 militaries. That's what, double what we pay for the military. How do you get that under control and still respond to these needs? Because eventually interest can get to a point where it exceeds too many things.
Well, David, we do have it under control, but I would say that the 2 parts of your question point to the balance that we have struck in this fall economic update. So we believe both that we need to be investing seriously in Canada and Canadians, we need to invest in housing, we need to invest in the economy, and we're doing it. But we do understand the importance of fiscal responsibility, and that's why we actually have the lowest debt and deficit in the G7, why we have a AAA credit rating. And what this fall economic statement shows is we have an economic plan which is fiscally responsible. It does mean, David, that our resources aren't infinite, that we can't do every single thing that every person would like. But what it also shows is we understand that you cannot cut at a time when Canadians need investments in housing, investments in the economic capacity of the country. That's what we're doing.
Okay, and the one other issue that's not here is pharmacare. And I know there was no expectation that we'd see a fully formed pharmacare program in the fall economic statement. But when I look at what you're saying about sustainability, keeping debt costs low, and preserving the AAA credit rating, which you drive home in this economic statement as of critical importance. Can you deliver the pharmacare program the New Democrats are demanding and keep Canada's AAA credit rating?
Well, first of all, thank you very much for being such a good and understanding reader of the fall economic statement, because you really heard what I wanted to say. Thanks a lot. And I mean that, like, okay. I mean that totally sincerely. Like that message was important. On the full suite of SACA measures, my colleague Mark Holland is working very carefully, thoughtfully, and constructively with our partners. We have a written agreement with the NDP. We're following that agreement. And I want to point out that that agreement and our promises that we are keeping are delivering for Canadians. Just this year, remember, just back to February, we made a $200 billion investment in healthcare. A really big deal. And we are continuing to deliver in this fall economic statement this year in this fiscal track on dental care, which is transformative for Canadians. And I'm actually really glad that we're able to do that.
But you can make an economic argument that the housing money can be deficit financed because increased housing allows for increased immigration, which allows for increased economic activity. The investment tax credits for the green transition, you can make an argument it can be deficit financed because it leads to economic activity. Pharmacare,
I would make both those arguments, David. I agree with you.
But Pharmacare is 100% an entitlement program, and I don't say that pejoratively. There's no economic lift necessarily from that. Can you deficit finance something that Mr. Singh, who's going to be sitting in this chair in a few minutes, has asked for and keep that credit rating? Or is the economic reality that universal single-pay pharmacare is just not affordable in Canada with the fiscal track you laid out today?
We have a written agreement with the NDP, and we have really good working relationships. My colleague Mark Holland is working carefully and thoughtfully on this, and I would say constructively. We're really glad to be able to deliver the things we're delivering today, and that includes massive and really valuable investments in healthcare. And I want to point out the dental care which is being rolled out today and is transforming people's lives is fully baked into that fiscal track that you have mentioned. But I don't do this very often. I do want to underscore something that was embedded in your question. And that is that the key investments that you see in this fall economic statement truly are investments in Canada's economic growth. And they are fiscally responsible because they're investments in our economic capacity. Early learning and childcare is an investment exactly like that too. And that's what our economic plan is about. It's about investing in Canadians responsibly so that we have the resources to continue to invest in Canadians.
So just one last final question, if I may. SACA, as you call it, the Supply and Confidence Agreement.
Yes, sorry for using a political acronym. That's disgusting and terrible. I apologize to all Canadians. I hate the acronyms myself. I truly do.
Right. Well, it runs to 2025 if it holds. If you look at the fiscal track, if you look at the job numbers, if you look at the economic projections that leads up to that, you've got a rough patch of runway ahead of you before you seek re-election if the normal political calendar holds. How difficult is it going to be for you to kind of turn things around politically and economically to put you in a more competitive position in 2025 than you are today?
Again, I obviously agree with you about the numbers. But I disagree with you about the gloss on them. If we had been sitting here, if we had a time machine and we could go back to the spring of 2021, depths of COVID, or let's even go back to the summer of 2020, depths of COVID, deepest recession since the Great Depression, 17% economic contraction, 3 million people losing their job, and someone had said to you and me, 3 years from now, we're actually going to have a soft landing. We will have 1 million more Canadians employed. We will have no recession. I think people would say, David, Chrystia, you guys are dreaming. That is going to be impossible to pull off. But that is the projection which is there. And the other thing I do want to say to Canadians is Canada's core fundamentals are so strong right now. They're strong because we are a country that is able to grow at a time when everyone else is facing demographic challenges. We're able to attract immigrants. We need to build the homes for those immigrants, and we're doing it. And also, we are winning in the biggest economic transformation of the global economy since the Industrial Revolution. This is great news, and thank you very much, Canada. If
you use that time machine and told them what their mortgage payments would be, how do you think they'd react to that? I mean, these are the other issues that are up.
Okay, we're supposed to end, but I'm grateful that you raised the issue of mortgages because that is very deeply on my mind. And that is why we have in this fall economic statement, for the first time, the Canadian Mortgage Charter. And if you will permit me, when I was a journalist, we had this feature in the FT that we would call News You Can Use. So this is the News You Can Use moment, and I would say to everyone who has a mortgage and is concerned about renewing their mortgage, please look up the Canadian Mortgage Charter, because this tells you what you can expect from your bank when you're renewing your mortgage. I think it's going to provide people with real relief. That's why it's there. Thank you for mentioning it, David.
Okay, all right. I'll give you some relief, your staff some relief, because I'll let you go. I've kept you longer than time. Thank you so much, Deputy Prime Minister and Finance Minister Chrystia Freeland. We appreciate you taking the time today.
Great talking to you.
And now it's federal NDP leader Jagmeet Singh, who is joining me now to give us his take on the fall economic statement. You said in your scrum earlier, you said this isn't a mini budget, it's a micro budget. I think that's by design, but you think it's a failure of this particular statement. What's your reaction overall to today?
I would say, just in the Prime Minister's own words, he's been referencing the idea that we need this wartime effort to deal with the housing crisis. I agree. I've heard from people saying, I'm afraid if I lose my home, I'll be homeless because there's nowhere else to rent. There's just nothing affordable out there. People are saying, we've heard stories, I've met with people that are good, they have good jobs and are living in their van because they can't find place. There's no vacancy in some areas.
Right.
So given that seriousness, what the government's responded to is just so little and not rising to the occasion or to the urgency of what we're up against.
So the housing accelerator is knocking out deals with a bunch of municipalities. They've lifted the GST off of rental construction, expanded it to co-op. They're topping up the funds to give favorable loans to developers. What more can they do in a document like this with the warnings coming from the central bank and economists everywhere that you got to be careful not to make it easier for interest rates to go back up?
A couple of quick things. First off, the main focus of this Liberal government has been to incentivize the private building, but they've not focused on affordability. So if there's any mention of affordability in terms of not-for-profit housing or cooperative housing, that's something New Democrats have pushed for. But on the measures of affordability, the measures don't start for years down the road. And that's my major critique. For affordable housing, for a lot of people I speak to who are saying, I can't afford the rent, you could build more condos, luxury condos, that's not going to help me out. Build 20 more of them in my community, I'm not going to be able to afford that. But for affordable housing, this government's focus is to have money that's years down the road. That shows a lack of really urgency to deal with people what they're struggling right now.
But I've heard you say that you want the government, any money the government sort of puts into housing, go almost 100% or overwhelmingly towards affordable housing and not really enable more higher income or more luxury housing, as you call it. But those people are looking to buy too, and if they don't have a supply at the higher end of the market, they're going to compete at the lower end of the market and make it even more difficult for low and working income Canadians. So don't we need a more comprehensive housing policy that has a wide range of units coming onto the market, and the governments at all levels have to play a role in that?
No doubt. We absolutely need, there's not one silver bullet, but what's missing in the approach is an approach of affordability. That's what's missing entirely. There seems to be this idea that the market got us into this problem, the market can get it.
But how do they do that? Is it they just start building houses and spending money doing that? Because if government spending starts juicing demand that way, we're going to run into an interest rate problem, which exacerbates the affordability issue for everybody, are we not?
That was my other point. We've spoken with the experts that say there's absolutely spending we need to cut. We should not be spending hundreds of millions of dollars on outsourcing contracts. That's something that the government's made a big mistake on. We shouldn't be spending billions of dollars on fossil fuel subsidies, public money going to highly profitable oil and gas companies. But spending money to build homes that are affordable would actually fight inflation. One of the major drivers of inflation right now is that housing costs too much. So investing in building homes that are affordable, using public land, federal land, only for affordable homes would be an approach that would be inflation fighting. It would not contribute to inflation.
I know the Supply and Confidence Agreement, the conditions of it are to lay the framework that would allow for the creation of national pharmacare. You have said you want a single-payer, universal national pharmacare plan. If you look at the fiscal track the government put out, with the deficits where they are, with the concerns they're raising about sustaining a AAA credit rating, do you think that's achievable based on where the country is in this moment of elevated interest rates and persistently high deficits and debt servicing costs that's going to soon be $60 billion a year?
We can do it in a prudent way, and that's responsible approaches. So first, we're saying, let's lay out the framework. That's not a money cost in the first year. It's laying out the legal framework. Next, let's look at the formulary. What medication should be covered? Let's lay out that plan. And then let's look at the bulk purchasing plan. How can we purchase bulk to bring down the costs? We're not suggesting we need to spend billions of dollars tomorrow, but we are saying let's lay out a plan to get to a point where we have universal medication coverage.
But by when? Because if you look at the fiscal track, like we're looking at a $40 billion deficit next fiscal year before any new spending is even there, and that's assuming we don't have a scenario to the negative. So what is the horizon? I mean, it's certainly not going to be anything by 2025. Does that then become the issue you fight the election on next time? Or when do you potentially see this happening? Because the math doesn't look like it's going to be quick.
Well, our agreement lays out the next couple of years. Right. So our agreement takes us to the end of 2025 and says that we need the full plan in place by the end of 2025. And then we can look to implementation. Implementation is going to require working with provinces. Not all provinces might sign on all at once, so there will be a rollout that will be measured. But let's also acknowledge that this is, on experts' opinion, a cost savings measure as well. The PBO put out their analysis that this would certainly save money for provinces, territories, even the federal government.
Right, but it would not be a net savings on the federal government's balance sheet, obviously, which is the question. It may save provinces for sure, but Ottawa would take on an extra cost.
It would take on a cost, but even that cost itself, if you look at the long-term benefits that weren't even factored in, but the idea that if someone takes their insulin and doesn't have kidney failure, and doesn't end up on dialysis, there's certainly a savings there. That's not even factored into the PBO's analysis.
There's about $20.8 billion in, we'll call it new spending and tax cuts, because there's the GST relief for rental housing construction over a 6 fiscal year period, so spread out over quite a bit of time. Some of the housing measures you talked about, the extra billion for affordable housing, the $15 billion in loans for rental housing doesn't elevate until 2025. There is a new mortgage charter that's been promised here to give some protection to people who may find themselves underwater when it comes to renewing their mortgages. There's a lifting of the GST on psychotherapy and counseling services, a promise to crack down on junk fees more broadly. What do you see in those measures to sort of help Canadians who are struggling with this high cost of living issue?
Well, on the mental health services, it's something that we've called for, getting the GST off of that. So that's a measure that we supported. Obviously, a small measure, but one we've supported. The idea of getting rid of junk fees, of course, something that we should be doing. The measure, the charter that we spoke about, really are codifying practices that are already in place, that we're already encouraged to be in place. So that's not a net change. It just kind of codifies what's already happening. What we're saying is, given how bad things are, the government should be using this opportunity to invest significantly and seriously in building homes that are affordable. That is the inflation fighting measure. It is required, and given the demands, given the urgency, the high population, the population growth that we need and we support, we don't have enough homes to house the people in our country, and we don't have homes that are affordable. That is not being met with this budget, and again, Canadians are left feeling frustrated by the delay.
Well, it's not a budget by design, right? It's not even a mini budget because they want to get away, they say, from the big budget in, say, March and then a smaller budget in November. They want it to be one document with a fall economic statement, an update in the fall. What do you make of that shift? Because that is a reversal of the pattern that has been at play here really since COVID destroyed the economic rhythms of the country.
Well, I'm not concerned about the changing of the rhythm or the changing of the approach. What I am concerned is, given how serious housing is, this is not something that is a run-of-the-mill problem. We're up against a very serious concern. And that seriousness is not being met with the government's response. And I think that should have given the government some alarm after seeing how bad things are, that they should have then taken this opportunity to say, okay, we are going to take this seriously. We're making serious investments to build affordable homes. They've not done that now.
Okay. NDP leader Jagmeet Singh, thank you so much for your time today.
Thank you.
All right, we're going to continue to get reaction from the fall economic statement. Joining me now is Jean-Denis Garon. He's the Bloc Québécois national revenue critic. Mr. Garon, it's good to see you again.
Good evening.
I saw your leader. He wasn't too happy about the measures here today. What's your number one criticism of what the government rolled out?
Well, number one criticism is that this is a disappointment because it looks like the government doesn't know what an emergency is. We're facing a number of emergencies at the moment, and homelessness, housing, with our medias, with our small businesses, and usually when you do an economic statement, they're supposed to have new measures in the statement, and it looks like they could have waited for the budget in March because there's nothing new in there.
There are a few small measures, but certainly not on the priorities you were talking about. I heard Mr. Blanchet talking about the lack of extra change for the Canada Emergency Business Account, the CBA loans, which is not a level of forgiveness they want, but also some criticism of the lack of support for media, because I know this is a big issue in Quebec, where TVA has really had major downsizing in its workforce. There is an increase in the labor tax credit for journalism. You say that's not enough for your sector, particularly in Quebec.
Well, look, I mean, TVA has attracted a lot of attention for sure, but it's also about the smaller newspapers, smaller medias in all of our regions. We need an emergency relief fund right now, pending to see what's gonna happen with C-18, and it's an emergency.
Part of the problem here, though, C-18 has gotten people kicked off various platforms, and it's affecting traffic and maybe affecting some revenue.
Well, the problem is that there's a revenue problem with those more traditional media, partly because those online platforms, they take their material without paying for it, and while we wait for the government to find a more permanent solution, we can't let our medias die.
So you said off the top that the government, it doesn't look like the government knows what an emergency is. Yeah. You talked about housing and homelessness. Of the new spending in here, there is tax relief for rental and housing construction. There is some money to help with loans. And you've seen the housing accelerator and other announcements, and Quebec, just a $1.8 billion deal.
What I said is that I don't see why they've done an economic statement to tell us that.
They could have just waited.
Because all measures had been already announced. The GST had been announced, so already announced. There's nothing new for housing. Now you're going to tell us that there's new spending, but it's an emergency. We need to start the projects now. We need to cut red tape. They're imposing new conditions upon provinces, and there's absolutely nothing new before 25, 26.
Right. Yes, but yeah, I mean, there is a housing accelerator and the other measures that have been done, and the GST rebate is being applied to co-op housing. So there's some measures there, but
I'm saying they're not new. They had done something interesting with GST. They tabled a measure in Parliament without giving us the details because they were not ready. So now they're putting the details in the economic statement while telling us that there's something new in there. The reality is that they were not ready a few weeks ago, and now they're giving us the details. But this is not a new measure that didn't require an economic statement.
There's something I want to read you here, though. This is on page 25 of the Fall Economic Statement for those who are reading along at home. And it's about breaking down barriers to internal labor mobility for tradespeople to build houses, but also healthcare workers. And they say they want to leverage federal transfers and other funding to encourage provinces and territories to cut red tape. It sounds
Once more.
I have the Bloc Québécois. I have to ask. It sounds like what they're doing with the housing accelerator, they may try to do with interprovincial trade barriers. Is that your read of it? What's your reaction to that?
The best way to not spend and to not help people that are in the field, the best way to do that is to start conflicts with the provinces and especially with Quebec. Now they're saying that they might withhold health transfers because of that. But they have been saying that at every budget or almost every budget for the last 20 years. You have a lot of experience, you know that. So there's nothing new in there. There's nothing constructive in there.
The sense I get from the government officials I spoke with about this today, because I saw it, had the same reaction as you, it sounds like it's going to be more like the housing accelerator where there's extra there for you if you do these things. So they will use federal money to help reduce trade barriers the way they change zoning regulations in municipalities. Is that an acceptable approach to you?
The problem with that is that the way they're saying it, it's just like they think that the provinces don't want to build housing. Like the provinces are against it and that they need that to build housing. The problem is red tape and conditions. Quebec is the only province that have had permanent programs for building social housing for years and years.
But you have the workers for that? I mean, could Ontario trade people go across the bridge and build affordable housing in Gatineau without any issues? I mean, isn't that one of the challenges?
Well, some progress has been done over the last couple of years between Quebec and Ontario, especially here in the Outaouais region. But the way they want to do it is not constructive and it's going to harm progress, I think. So the problem that we have is that they tell provinces. It's almost as they were telling provinces, we don't believe that you want to build housing, and we want you to build housing, so we're going to tell you what to do while, at a time while provinces Quebec have been doing it for years and years and years. I mean, how can that work?
Well, the reality is, in a lot of cases, it's municipal governments who have gotten in the way of housing because, of NIMBYism and people not wanting certain types of developments in their neighborhoods. This seems to have done away with some of that. So
now they believe that threatening them is going to make them build houses. I mean, you see, it's not. So you're telling so you're saying we're going to ask provinces to threaten municipalities to, and how's that supposed to make them work constructively?
No.
How's that supposed to
they gave municipalities a bunch of money for housing if they met the conditions to change the zoning. That's what we're seeing. Though Quebec has its own deal
But that's not an emergency response at all.
Fair enough.
Yeah.
All right, Jean-Denis Garon, the Bloc Québécois National Revenue Critic. Thanks so much for your time and your reaction today. Appreciate it.